Cash Cow Farmer software program is, the revenue management system, expense management system, and then also some data management and consulting programs that we offer in addition to that. So to introduce myself, I'm Scott Anderson. I'm the founder of Cash Cow Farmer. And today we're going to go over what the cash. Just a little technical difficulties. I'm kind of new at this webinar deal, so bear with me here. But anyway, I'm the founder of Cash Cow Farmer. It wasn't all that long ago when I was in the same situation as most of you farmers, where I didn't know, what my production costs were, if I was going to make money. I was just day to day, just focusing on the farming process, the operations, not focusing on the finance side of things. And, so fortunately I've got a pretty good financial background, which helped me start to crunch numbers and figure out where my strengths were in the operation, weaknesses, and all that stuff. So that's really helped me, and it's helped a lot of our customers as well identify strengths and weaknesses in their farming operation. And so today we're going to go over how the program helps the farmer, how to integrate it into your current farming operation, and some of the benefits of how it works. And in addition to that, some of the additional services that we provide. So just to start by just walking you through our front end website here, we've got a couple, this is just the homepage, cashcowfarmer.com, and we've got a couple nice features here, such as the blog. There's two blogs. One of them is just the regular blog where I actually write a lot of content, financial content that can help you restructure loan debt, all kinds of stuff. Here's a couple articles that we were in, talking about why cash is king and how to maximize your cash on your balance sheet. Buying farmland, doing one right now that should be out today or tomorrow on negotiating land rent. It's a hot topic for farmers right now, given the way the market is. So if you click on one of these blogs, any of them that I've wrote, you will have an option to, rather than read it, which it's not too much to read, it takes about 10 minutes or so, you can just listen to it in podcasts, or you can go to iTunes, subscribe to Cash Cow Farmer on iTunes, and then you'll have all the iTunes content, which is basically the blogs talked about with James Carberry, a friend of mine who's a marketing expert. So you can just listen to the podcast and listen to the talk. This one's 21 minutes. Most of them are less than that, right around 15 to 20 minutes. So just a great little nugget for farmers to think about, great opportunities for them to improve their financial situation. The second blog that we do is just the grain market comments, and that's usually wrote by Lynn Miller or Craig Howgart at North Central Farmers Elevator, marketing experts, and they love technical analysis. So you'll find the technical analysis for corn, soybeans, and wheat, and you'll see in here you've got a 1-year chart of corn and then some momentum indicators there as well, which is extremely helpful for determining where the price is going in the next couple of days. For farming, we're trying to figure out, we're not trying to call the top, but we are trying to structure our income so that it's consistent and going up every year. That's the goal. So anyway, without further ado, we'll jump into the program. I'll walk you through the basic steps and how to input the data. So you just simply log in with that green button here. Here is an example farm that I've set up in here. It's about a 7,200 acre farm. And so you'll be brought to this page once you log in. And from here, the first thing you do is you start entering the prices that you paid for all of your inputs and then your operating expenses as well. So you'll start entering the prices. It'll be blank like this. You'll enter the year, number of acres, and then you'll start adding, various operating costs here. You might have fuel expense of, $45,000. You might have labor expense. These are all operating costs are shared across your entire farming operation, and you're just taking the annual total. So one way to really easily enter these operating costs is, many of you are using QuickBooks. If you go to QuickBooks, here's a QuickBooks account here, and you go to the reports, and you go to company and financial, profit and loss, standard, okay, and then you enter in up here, you change the date to the last calendar year. For example, we're in 2015 now, so I'm going to go 1/1/2014 to 12/31/2014. This is going to give me what expenses I had for 2014 here, the entire expenses, because that's the best way to look at your farming operation is take the last year. And so you've got January through December 2014, got the income areas here, and then the expenses. Here's advertising, agronomy, bank service charges, cars and trucks expense, chemicals. Some of these you're not going to put into the overhead section. For example, agronomy is going to be put on each individual field. We'll get to that later. Chemicals, you won't put this in your overhead, but for employee bonuses, labor expenses, stuff like that, here's all the health insurance expenses. Let's look. We've got meals and entertainment, professional fees, any legal services for land bought. You know, if you have a financial accountant, might be on that professional fees. You've got a quad track expense here. There's going to be fuel expense, gasoline, fuel, and oil. You're going to want to include that expense on your overhead. So it's very easily done if you're using already QuickBooks or something like that to just go ahead and figure out what your annual expenses are on some of these categories. And so this is important to take into account when you're looking at the financial side of your farming operation, is seeing how your operating costs are fluctuating year to year based on how many acres you manage and what that cost breakdown is per acre. So I'll just bring you into one that's already complete. So we'll go into the edit screen here. So this is one that's fairly complete. You've got, land expense, 89,000, repairs, 94,000, insurance, 9,200, labor, 165,000, machinery, 197,000. So this is a 7,268 acre example. So all these are in there, and whether you've got a Disney trip with the family for $10,000, I mean, you're going to want to put that. You can put that in there, and that'll let you know what that's actually costing your farming operation if that's your primary source of income. So the next thing is to enter all your different seed prices for the various varieties and types of seeds that you buy. So it's very easy to do. You can see there's multiple corn and soybean seeds. There's sunflower, there's spring wheat and whatnot. You just easily hit the plus button. You select the variety. If we don't have it listed, you can just enter, your cousin's seed variety here that you buy it from, or whatever it is, the variety, the exact variety, and then the cost per bag. You notice as we switch to other commodities such as sorghum or let's do spring wheat, for example, you're going to have, let's say you're using a brick variety, 1, 2, 3, and the cost is going to be $15 a bushel, and that bushel is going to weigh 60 pounds. So you just have to enter that data in. It just takes a few seconds to enter that in. It's no big deal. And then all this is saved and stored in a database, which we'll pull from a little bit later. And if you need to remove something because the variety is no longer being used, you just hit the X and it's gone very quickly, very easily done. So the next thing is your fertilizer prices. Notice the liquid fertilizer, 1034. When you add that, you're going to need to get the density. And it's very easy to find the density of fertilizers. You just go to Google and type in fertilizer density. And then usually the top 3 or 4 links will bring you to a kind of a sheet like this. So if we're doing 1034 right there, 1034, the density is 11.65 pounds per gallon. Reason why we need to put that in there is because fertilizer is bought in weight, tons, for example. You pay $4.95 per ton for this 1034, but you put it on in a gallon format, in a volume format. So we just have to convert that in order to get the right cost per acre. Dry fertilizers are a lot easier. And when you're building a fertilizer, if you select the liquid application, it's going to bring up that density number that you'll have to put in there. So just type the fertilizer name in, the cost per ton, dry or liquid application. And chemical is very, very similar. You have AMS here, which is a 44 cents per pound in this example. And then what you'll just change from pound to gallon. You usually won't use ton, but that's there. It's available just in case. And then you've got all the other liquid fertilizers here at the price per gallon. Very, very easy to do. So when you're done, you just click save there, and it will bring you to this page, which is just a summary. And this is handy when you're going to negotiate seed, chemical, and fertilizer for next year. This is a good page to just print off and have handy, because when you're looking at, buying some urea for next year, you paid $4.25 and $4.30 depending on whether it was in season or out of season. And common question I get is, how do you differentiate in season and out of season? Well, you just build an in season variety here and a prepay variety. So save $5 by prepaying last fall, and then you've got the in season price right there too. If anybody has any questions, feel free to just type a question in the browser there. I think if you're using Google Plus, there should be an area on the right side to enter questions. If you're watching on YouTube, there might be an area in the bottom. Otherwise, please just email me a question, Scott, SCOTT, at cashcowfarmer.com, and I'll get it answered once I get your email. And if I don't get it answered in time of the end of the webinar here, I'll just reply via email to your question and try and answer it as best I can. You can also contact me, 402-304-6017, if you have any questions as well. So that's the price sheet. Very easy to do. The next thing you're going to do is, if this is your first time, you're going to click add field, and you're going to start typing in your field details. You're going to add each field individually. So this will be grandpa's here, and the legal description, you'll type that in. Whatever the legal description is, you'll select the commodity, corn, wheat, beans, whatever it is. So how many legal acres are in that field, how many planted acres are in that field, your expected yield. If you're building a budget, like if you're starting for 2015 and you've not harvested that crop, you're just going to put a yield estimate in. You can use your best judgment there, or you can use your APH for insurance. You can use your insurance APH there. So I know with the trend adjustment on insurance, you're going to have a little bit higher, maybe than you would, a higher insurance APH than you would expect to get. So you could always use your best judgment there. But that you want that expected yield to be as accurate as possible, because this program will calculate your expected inventory that will give you the information you need to make good marketing decisions, which we'll get to in a little bit. So in addition to that, you'll want to enter the rent that you pay on that field. You don't pay rent, you'll have your land taxes. So you just take your annual land taxes and divide it by the legal acres, which will probably give you $22 an acre or something like that. So the next thing is going to be your agronomy. Remember, when we were looking at the QuickBooks thing, there's a few things we don't put in, and the agronomy is one of them, because we apply agronomy to each field individually, as some fields might have higher or lower agronomy expenses. So if you're hiring a scouting agronomist, it's probably going to be around $5 an acre. If you have variable rate prescriptions, it's going to be somewhere between $5 and $12 an acre, depending on whether it's old variable rate prescriptions or brand new fields that have to be rezoned, that have to be zoned up from scratch. Then you're going to enter your insurance costs per acre. For corn, this is your multi-peril insurance. So whatever you pay there, and then any additional hail insurance that you have, you can enter there as well. I'm going to just zoom this in here so it's a little larger. Also, you've got harvest costs. Now, if you pay people, if you got a little harvest help that you pay in cash, and it doesn't show up in your QuickBooks account, or doesn't show up in your labor account or custom hire expense, then you can put that in here. Also, you've got drying costs. If you have a couple fields you expect are always consistently wet, you're going to want to put a little drying cost there, because those production costs are going to be more expensive based on the extra moisture that has to be removed from that commodity. Next is a miscellaneous cost, and this is just kind of, you can put anything you want here. This is, I usually just put $5 miscellaneous cost per acre, just in case there's something I didn't plan for. If you got a tillage pass, you could put that there. If you want to make $100 an acre, you could say, okay, what do I got to sell this commodity at to make $100 an acre? You could put that there, but for now, I'll just leave it blank. So notice there's 5 more little areas here, and each one is its own little category. So other overhead, this is going to be this can be used for many things, such as the ARC farm program. Like you're going to want to put that in there. So the ARC farm program and all these new farm programs that came out, ARC and PLC, they're going to pay you based on your base acres in that field. So you might have a 150 acre field with 100 acres base for corn, and corn might be paying $60 an acre. So you're going to have, you know, $6,000 based government payment on that field. So you'll want to take $6,000 and divide that by 150 acres. That's going to give you a $40 an acre, you know, income on that ARC payment, which is going to be very helpful. Next thing you're going to have, and here you can put in an insurance payment. Let's say you had some winter wheat that got droughted out or something like that, and you come next spring and it didn't germinate very well, and you got a $200 insurance payment. You can put insurance payment in there for $200, and that'll offset some of these additional expenses. Also, you can the next little column is any custom application. If you hire somebody to do custom harvesting on your corn and it's $55 an acre for all the planted acres, let's say there's 145 planted acres out of that 150, you can put that in there, and then you'll select whatever the harvest date was. Let's say it's October 30th or something like that. You'll select that harvest date. And then any other, you might have a chem app here, you know, for $6 an acre, and they might have actually charged you for all the legal acres. That's what's nice about this acre number here is, you know, you can change it based on when the application was done and how many acres they actually charged you for. Another great way to kind of double check and say, hey guys, you're charging me for 160 acres and this field's only 150 acres. I think you got a little overlap there that I wouldn't be responsible for. So, or they forgot to reset their acre counter, which is pretty common with custom applicators. It's not a big deal, but all right. The next thing is your planting application. So you select whatever variety. Notice only the corn shows up because we have corn up in the crop type. So you just select whatever variety of corn you put on that. Let's say you put this DeKalb. You put your average plants per acre, which is going to be based on what your variable rate prescription is going to be, or eventually it'll be updated to whatever your monitor, your planting monitor on the tractor updates your actual applied, you know, per acre, seeds per acre area. So then you select your planting date. Very important to put a planting date in here because the program will actually give you a shortcut in the fields area. You can click your planting report for 2015. It'll bring up a page that'll allow you to export all your planting data. So you can just email that right over to your crop insurance or the FSA, and saves you a ton of time trying to sit down and figure out what the heck happened. And then how many acres, if you planted, you know, 145, or if you got a split variety, you might have, you know, 100 acres that got that DeKalb on it, and then you might have a golden harvest variety here with that same 31560. Might be the same date, or it might be a little different date. I mean, you can of course you can track that. Everything is tracked here. And then there might be 45 acres of that golden harvest variety. Very flexible. Next, you put in your fertilizer application. So you might have had a urea application of 225 pounds applied. Let's say it was applied in the fall, November 6th, for example, and they did it on 150 acres. And then you might have also had some 1152 in there, 126 pounds per acre of 1152 applied still back in November on the 6th I had. And they might have did 150 acres of that. Notice that the application of some of your fertilizers and chemical might be more than your planted acres, so we need to account for that. And then very similar is putting in your chemical application. You're probably going to have Class Act and, you know, Power Max, and then you might have a little bit of Halex. You know, that might have 12 ounces of Class Act, and then you click the date applied. Say you put it on May 6th, 150 acres, probably got the whole field, you know. Power Max, 32 ounces of that. You can see where I'm going with this. It's very, very easy to do. Then you click save. After you click save, you'll be brought to the field summary page. That'll have all your fields in a table format that'll go over this. This is the big part of the program. So you've got all your fields here, and each little block is going to be, this is the corn fields up here. Notice the type corn. And then the gray area is going to be a summary with the weighted average of all these costs, production costs, average yield, average production cost per acre. And then we've got soybeans down here as well. So this is very important. This allows you to actually make sense of all these numbers here. So just going across, there's a hide and expand the cost details button here. This little angled arrows, they allow you to expand that input cost and see, okay, well, what's the breakdown? Very high custom application expense on this field. There's a lot of overhead here. I mean, some of the fields are very low on overhead. The operating cost at 124 basically takes all those fuel, labor, insurance, repairs, land expenses, and divides them out per acre. So all those expenses you've seen in the price sheet, that's $124 an acre. Few people actually calculate that properly. That's a big problem, and where we notice a lot of weakness in the financial side of farming is that farmers very often they don't include their overhead, their operating cost in their production cost calculations. So notice this field is $4.36 to produce a bushel of corn. Well, that ain't gonna work this year for sure. So this will alert you to fields that are losing money. So this is the break-even price on 120 bushel expected yield, not a very productive field, and it has a lot of expenses, $106 an acre in seed. I mean, this is a big weak spot in this operation here, losing $104 an acre. I'm sure there's a lot of fields in individual farmers' reports that are losing $124 an acre. Here's a hero. This is a hero field, $124 an acre. It costs $2.50 to produce that. Notice these fertilizer, chemical, and overhead expenses are very low. This is actually a crop share example where you've got, see, 126 bushel yield, that's 2/3 of the yield. This is 2/3 of the chemical. This is 2/3 of the fertilizer. But you can see that crop share is very productive this year, given that cash price is $3.17. And you set your cash price, just have a question on setting the cash prices here. So in order to set your cash price, you just set your basis. So you'll go into corn, and the corn price and the soybean price will track the futures market if you select track the futures market, or you can set a manual price. It's no big deal. So we've got that. It's tracking the futures, so this actually isn't going to show up, but I've got a 64-cent basis on this example, and you just set the basis, and it'll take yesterday's close for the futures price, and that'll pull into your cash price of, let's see, 317 is what it is right now. 317 is the futures are going up and down today, but you'll know that the next day you'll have that included in your cash cow program automatically. So you've got the cash price right there. And so notice that the cash price is actually less than the break even on this field, but we're making $3 an acre. And you might say, well, how is that possible that it's costing us $3.47 and the price is $3.17, but we're making $3? Well, that's because we've got some contracts in there. So jumping into the 2015 contracts, notice a lot of that corn was sold for $360, $361, $365, $365. So 300,000 bushels were contracted for $360 to $365. Therefore, our average price, taking that we have 117,000 bushels left that are unsold, this is hugely important for all the farmers here. Unsold bushels 117,000. Total production is 417,000. We've got 300,000 bushels contracted, and our weighted average cash price is going to be $3.49. So that actually, this is an extreme calculation. It's very hard to do with pencil and paper. A weighted average, weighted averages are very hard to do with pencil and paper. Even in a spreadsheet, they're challenging to do. So the program does all the heavy lifting there. So that is very beneficial. And it's very easy to add a forward contract. You just click add a forward contract. You put, you know, put your buyer, plot, corn, whatever commodity it is. There's a drop down for the commodity. The amount, let's say you got 100,000 bushels, and let's say you locked in the futures price at 385 and you've got a 65-cent basis. So you can save that and it'll populate in that contract. It's very, very easy to add one of those contracts. So that's extremely valuable information. Going back to the fields page here, you've got the summary, which is very, very helpful. You've got 2,800 acres of corn, $459 per acre weighted average, because each field is a different size. This 90 acres that costs 600 is going to have a different weight than the 378 that is over 259 acres. So this gives you a weighted average of your production costs and then a weighted average of your expected yield. And then also what it costs to produce corn on this farming operation, $3.13. So, and then you've got here your profit. So $53 an acre profit on corn, pretty darn good. One handy button, always use this button. It's very, very handy. You can change it over to field cost per field. And this is where it's extremely valuable to see, okay, total production costs are 1.3 million to produce 417,000 bushels of corn. So when I'm making marketing decisions, I know production's 400,000. I'm going to do 4 contracts for 100,000, for example, and then you know exactly what you got. And then now, after I've made some contracts, I put them right into that contracts page, and then have the ability to go back and say, okay, what have I got left to contract of this new crop? What have I got left to contract of the old crop? And you can go back and forth between years. Like I can go to 2014, see what I've got left to contract. Once I get 2016 complete, I can see, okay, what am I looking at for 2016 production estimates? That way I can start contracting 2015. The price of corn for 2015 is right around 407 on the futures board. So you could lock in over $4 corn on the futures, take your 65-cent basis or whatever that is. You're looking at, 345 or whatever that would be for a cash price on corn for next year. That's not a bad price, given I know a lot of guys would be happy to see that price right now, and they can probably negotiate their inputs down a little bit better and get this down to like $3 an acre for cost of production. So next you'll see looking to make on the 2,800 acres, $151,000. Very nice. Soybeans, on the other hand, there's a lot of red area here. We'll just go back over to the crop break it down cost per acre. So notice there's all these red numbers right here. Well, there's why are these numbers red? Why are these numbers, black? And there's a big red number. So looking at that, I mean, the 30 bushel production for a very high production cost. Why are the production costs so high? This is a field, $11.53 break even on soybeans. This is a field where, it's a big weakness in the operation. It's costing money to farm this field. If we own that land, what can we do to make it productive, to change that negative 80 into a positive 80? Well, maybe it's a CRP program. Maybe we quit renting that field. Maybe we need to do, wheat or a different crop than corn or soybeans, because it seems to be struggling with soybeans. Another neat little thing, let's say I got 30 bushel. That's my expected. But let's say I get out there and harvest and I'm like, I actually got 40 bushel on that. I got, 33 and a third % better than I was expecting. And I'm going to save that. And you can see when we get back over to that field, south of the pasture, 865. Now we're making $8 an acre because there's also some forward contracts. See how that changes there? We went from $11 and some change production cost to $8.65 just by changing that from 30 to 40. You do that on pencil and paper and you're sitting there for a half of an afternoon trying to figure out what the difference is. So extremely valuable. Once you get all these acres harvested, you can jump in the program, put the real harvested numbers in there, and then for all your insurance losses, you can go back and add those proceeds and figure out exactly what you're going to make on every single field where your weaknesses really are. You can also add those government program payments to figure out exactly, okay, I might be losing money on this field, but the government program is pretty good. I've got a CSP program, and then I've got the ARC program, and I'm actually generating another $60 an acre, which this field is actually, $40 an acre right now profit. That's not too bad. So, I switched back over so that you can see there's the soybean summary, 144,840 bushels of soybeans. There's the soybean revenue or income, excuse me, based on the cash price. My average production cost $8.27. It was fortunate that we were able to lock in some forward contracts to bring the actual sale price up quite a bit, but because this is not a rosy situation where you got over $8 beans and under $8 cash. Very, very scary. Next thing is going to be the whole farm. This is the whole farm, 7,300 acres, $2.5 million to farm it. You're going to have 562,000 bushels of corn and soybeans. This is kind of taking in the soybeans. This number wouldn't really be that important, but here you go. You're going to make $235,000 on your farming operation. You show this to your banker, he's going to just be pumped. He's going to love you. You're going to be his favorite customer. The bankers love this stuff. You ever need to borrow money, you just show this to the banker and say, hey, we're going to make $250,000 this year or so. I've got some farm program payments I don't have in there quite yet or something like that. And, I like to buy a new combine because there's a hot deal on a combine right now. And, this is going to make you a lot of money. The price of this program versus the return on investment is just astronomical. So that's basically how the software program works. And just to go over briefly, you can see, so we offer with Cash Cow Farmer, we offer the software program. You can see, let me log out here. You can see it's literally pennies per acre. So if you get $750, you're looking at, I don't know, 10, 20 cents an acre is what it actually costs for this program, or for the up to 25 fields, and then $1,500 a year, what it costs for the program, up to unlimited fields. And everybody gets a free trial. So once your free trial 30 days is up, you just go to the account button here, you click on subscription details, and you upgrade to whatever number of fields you want to put in there. 25 or less is the basic, and then the larger ones there, you put in your password there, and then you upgrade with the credit card, and it'll just automatically bill you every year. This is just a one year charge. It'll just automatically bill you every year, so you don't have any interruption in your service. So very, very simple to do this stuff. And if you don't make your money back times 10, be happy to refund your money. So it's going to help you that much. I can guarantee you that. So going on the services, you notice that there's some data entry here that some customers of ours have told us that they don't have time to do. They're not interested in doing the data entry. They said they want to just look at that fields page right here. They just wanted to have this and look at it and have somebody else update everything on a monthly basis. And so what we do with Cash Cow now is we'll charge $10 per field every month. So if you got 50 fields, $10 per field every month, it's $500 a month. But every month we will do a call with you and collect all of your data, whether it's this harvest. For right now, we're collecting the actual yield data from our customers, and we're updating their yields so that they know exactly where they're at on their production costs. It saves, for $500 to hire, you could hire your own accountant for $20 an hour, and a couple hours later, you're way over $500, for the month. So this is extremely cost effective to do, where we do the data management, $10 per field per month. And we do a call every month, and we get all the data from you, and we update the program for you. So very, very useful. A lot of people are interested in that. And then the other thing that we are offering now, and this is limited to just a handful of people right now, is the financial consulting services, where we will go help you put together balance sheets, cash flow statements. we look at your farming operation, we look at your assets, your liabilities, and we try and figure out ways to find hidden profit in your farming operation. We look at doing commodity loans to save you interest expense on your operating line. Commodity loan right now is 1.375%. Last year was 1.25%. So commodity loans are a great way to take stored grain, monetize it, pay off that operating line of credit that's at 4 or 5%. And then the commodity loan, you're paying 1.37%. That whenever you sell your corn, you pay the commodity loan back, take the rest, and then you're set. So, we do lots of things like that. We look at government programs that are available to help make your farming operation more money and all that stuff. That's a huge return. That's also $10 per field. So, I mean, the grand scheme of things, if you did the whole complete cash cow farmer consulting, data management, and the software, you would be spending $2 to $3 an acre across your field, which the return, I mean, I can almost guarantee you we can find a way to increase your revenue by $20 to $30 an acre and cut your costs in addition to that. So anyway, a couple questions that we've got here. Privacy. There's a few people that asked about, is the data private? We're just concerned about having our data in a cloud-based system. And yeah, it's entirely private. It's just as private as your bank account when you log into your bank account online. Everything is secure. It's encrypted. So all this data is private. Only you and your login can access the data. And then we can actually access the data for troubleshooting. We only access data for troubleshooting, helping farmers. Like, we can log into their account if they're having problems, like they forgot to hit save or something's not working right. We can log in, diagnose the problem, get them up and running again. So again, this is a software, so there's tendencies to have bugs every once in a while, which we can troubleshoot pretty quickly. So let's see, another question here. Well, I guess that